Hi, folks, and welcome to our Monday market review. As you will have noted, we are moving our presentation of the market review to later on a Monday. So please do feel free to comment below. If you've got any questions, certainly pop them into the comments below this. And I'd appreciate it if you're finding value in our stuff, if you could like it. And also, obviously, if you know anybody who would find value in what we are sharing with you, then please do pass it on to them. Really appreciate that. Okay, so speaking of last week first, I think it's fair to say that it was not a spectacular week. We haven't had one for a while now. It started off reasonably flat. We had a few breakouts, but then really on Friday, it was almost like having another non-farm payroll. Things reversed on us on pretty much all of the instruments where we had taken a trade. So overall, the week was marginally profitable for us, but it certainly wasn't spectacular. However, you must remember that whenever we face challenging market conditions, the job of the trader is to always limit downside. Always make sure that you're managing risk first, so that no matter what happens, you can never be hurt too much, so that when conditions are favorable, you can make hay while the sun shines and you can make the most of it. If you've been hurt too much and you've lost too much capital, that's very difficult to recover from. So always remember that it's the underlying principle of convexity is to limit downside and maximize upside in everything that you do in your approach to the market. Right, so running through our instruments, the Euro USD on the weekly time frame, you can see that last week we just had that bearish inside bar. There you can see that that turnaround, and the start of this week, you can see it's continuing. Should this not make a higher high, then of course this high will be ringed and we'll be able to progress this analysis. At the moment, we are still technically in a bearish trend on this instrument. It's still a potential trend until such time, should we get a bearish impulse wave with a lower low, lower close here, it is still a trend. If we have a breakdown in the sequentiality of cyclicity, that obviously then would qualify as a false breakout, which would probably show a head and shoulders or inverted head and shoulders here. So that's in the weekly time frame. Still quite a lot of work that needs to happen before we can do anything there. However, here on the daily time frame, I think we are ready to progress some of this analysis already. Just to double check on our, so we actually need to point out that this is the low that was ringed. And because of today's rollover, I'm actually going to progress this already, despite the fact that normally we would wait for the end of the day. But one of the things that we did comment on the weekend with our mentoring session was that this morning's market open, should it make a lower low, would mean that this high was certainly going to be ringed. And that's exactly what has happened. So we are already able to progress this. We did expect to be able to do that. So let me do that very quickly. It hasn't changed the channel dimensions at all. But what has happened is that any potential bounce for those of you who are trading class 1 WM pattern on the higher time frame, selection time frame, that was a class 1 W pattern, but it's rolled over now, and no, that is no longer the case. So it was a potential setup. In fact, there were a couple of setups for lower time frame trades there. And as I say, it was late on Friday where we had that rollover and came down and stopped out any trades that you might have been in there. So again, making sure that you don't get married to your hand. You need to just allow the market to take you out and then sit in your hands, bide your time, and wait for another opportunity. Right, looking at the cable, nothing really happening here. You can see last week's inside candle, even less impressive than on the euro. And here we haven't even had an impulse wave during the course of last week. So nothing really for us to do there at all. I'm not going to waste time on the pairs where we really are in ranging conditions. Here is another one on the dollar yen on the weekly time frame, very much inside in the middle of that channel, and likewise here on the daily time frame. So nothing for us to look at there. Dollar Swiss similarly, weekly time frame first, and here on the daily, did get an impulse wave last week, which rolled over. If you're trading overlay on all impulse waves, you would have had your eye on this one, but it actually didn't give us an opportunity at all. With that rollover, it just carried on going down. In order to have gotten a setup, we would have needed to have a higher high at some point here. We didn't get that. USD Cad, weekly time frame again. You can see last week we did get a bullish impulse candle. Now, this is slightly more interesting because we had that marginal breakout, which means that the market is trending until we have a breakdown in sequentiality of cyclicity. That has not happened yet. All that did happen is when the market rolled over, came back inside of the channel, because it managed to maintain itself above the previous wave low. We're still in the trend, albeit a weak one. Now, last week's candle ringed that low, which means that we are now into a technical phase one. It's not confirmed, of course, until we get the higher high, higher close. But certainly, under normal circumstances, that would be tradable. The only reason we wouldn't be looking to trade that with our daily impulse, as an example, is because we are still inside of the channel. However, an aggressive trader on the hybrid, looking to trade the potential next phase one that will give us a full breakout from the range, you may well have been looking for class 3 if you're aggressive, or class 2 W pattern here on the daily time frame. So that bullish impulse candle on weekly looks like this. We had a phase one on daily. The breakdown and that sequentiality of bearish cyclicity indicating the end of that phase 2 wave, and now potential resumption, obviously, of a phase 1 wave on daily. If you're an earlytician, you would have noticed that we've got this first phase 1 wave, phase 2. This gave us almost a perfect 618 retracement. And of course, the wave to catch is wave 3, always with Elliott wave. Impulse waves, we want to catch the third wave. Now, in order for us to be able to do that, we're looking for a bullish impulse candle. Should we get a bullish impulse candle today, that would certainly be a signal for us to go long. Now, bearing in mind that that would be a hybrid. It's not an impulse, it's a hybrid. And remember, the hybrid strategy has a lower probability of success, but a very high reward to risk ratio. So it's probably the most convex of our strategies. But looking at the lower time frames, there's nothing for us to do here. If you had wanted to trade the end of that phase 1 on an overlay, that certainly was a potential setup, and you can see we actually got that trade. Went straight to take profit on, when was that? The 9th. So on Thursday, we had a nice little overlay there, and you can see there with that lower high, followed by the bearish impulse candle giving us that setup. So very nice little trade there. In fact, I'd say the overlay is what kept us in profit generally last week, +1 winning hybrid. So that was the week for us. Anyway, Aussie USD, we spoke about this last week with the bullish impulse wave giving us a breakdown in sequentiality of cyclicity, a new LPO range. So I haven't really touched that. Obviously, with an inside bar here, it doesn't mean that this, well, certainly on the weekend, we were considering the inside bar not being a confirmation of the end of this bullish wave. But we did point out as well with this very, the bearish close here, that any lower low would signify will signify a ringed high here, which would mean the end of that wave and a confirmation of this is our LPO range. So that's it on the weekly time frame. We are now very much in a range again, so we wouldn't really be looking at anything there. Here on the daily time frame, that bullish move on weekly, as we noted the previous week, gave us that breakout. It also pulled back inside of the channel again. So similar picture here as to what we looked at a minute ago. So inside the channel, trending, yes, but showing weakness because of that. However, this is a class 1, or was a class 1 W pattern up until Friday. And certainly this morning, once again, with that strong bearish close there this morning, with this having come down a little bit further, ringing that high, inevitably this high being ringed by today, regardless of where this candle closes, means that we can actually advance our analysis of this, bringing the top of the channel now up to this point here, our 4-wave channel, of course. And also with that breakdown and sequentiality of cyclicity, that is an absolute confirmation that this was a false breakout. So there you actually have the transition from a potential trend into a false breakout, literally this morning with that high being ringed there. This was another pair where we were looking for potential hybrid setups, and unfortunately, none of them worked out. It was a very nice setup over here, but with that rollover on Friday, it just took us up. And you'll see that that was the theme for Friday afternoon, generally speaking, with one or two exceptions. All right, so moving on to the last of our majors and minors, this being the Kiwi. Similar picture, but the relative strength of the New Zealand dollar is starting to show itself here during the course of last week. So here we have on the daily time frame a picture perfect class 1W pattern. And not only is it a class 1W pattern, but it closed outside of the channel. Our C closes outside of the channel. So as soon as this was ringed, the lowest close in this period was still outside the channel. So a very nice setup, certainly for hybrid, first of all, hybrid trades at the end of that phase 2. And as soon as we had the phase 1, which was on Friday, we could start looking for a H4 impulse trade. So the hybrid and the H4 impulse visible here. So depending on your targeting, obviously. Now, again, unfortunately, these have not worked out. However, we do have another potential setup showing itself here. This is still in a technical phase 1. So if we do have another setup, it's not a hybrid, it is going to be an H4 impulse. Now, in your filtering for H4 impulse, remember that if you are being super conservative and only waiting for class 1W patterns, then that would not fit the bill. But this is a stacking up to be a class 2W pattern if this candle closes as an impulse candle in 30 minutes time at the end of this 4-hour candle. Right, so moving on to our yen crosses, it's a very similar picture, to be honest. So you'll notice that the correlation between the dollar and the yen pairs here, this is looking very similar to Euro USD, same kind of picture on the weekly time frame. And here on daily, so just different in detail and nothing more. So here we have not yet had an isolated high followed by an isolated low. So this is still technically trending. We've not yet had that breakdown and sequentiality of cyclicity, but although it's trending, it is in a phase 2 of that trend, and it's showing weakness now that it's pulling back inside of the channel. Not only that, but if we look at our close here on Thursday, 75.2 compared to the previous wave high, you'll notice that it's slightly inside of the price territory there, which means that this is a potential class 2 W pattern when we get a ring low over here. So we no longer have the possibility of a class 1 valid W pattern for those of you who are WM traders. So that's pretty much the end of that for us. If you're trading more aggressively on the hybrid, where you're happy to go with that and trade the potential resumption of this trend, then on the 4-hour time frame, you'd be looking for a breakdown in the sequentiality of cyclicity here. Nothing has shown itself yet, as you can see. Quite long waves. The periodicity here is quite long. In any case, that's something that you can keep an eye on, but it's not immediately high on our agenda. GBP Yen, really flat, nothing of interest last week with that spinning top doji. So really of no real interest to us on that time frame. But dropping down now to the daily time frame, you'll notice that for those folks who are looking for class 1W patterns to trade, even though it is inside of a channel, we did get that. We had this support level tested multiple times during the course of last week, with the C close remaining outside of that extra A price territory. So as soon as this was ringed, which was on Friday, obviously we would be looking for a hybrid, which we got the hybrid set up. And then now that we are into a technical phase 1, you could start looking to trade this on H4 impulse. Again, your filters will determine whether you get into that or not. depending on how aggressive or conservative you are. But this hybrid setup has survived so far. The system would have trailed the stops already, because using our 3-6 rule, this certainly 1, 2, 3, 4, 5, 6. Well, that would be the low now in any case. So not looking that fantastic at the moment in terms of the fact that we're still not in profit on this trade. But having said that, the picture is still reasonably promising. The only hesitation I have in terms of saying that is from an Elliott wave point of view. This is not a valid 5-wave pattern at all. For those of you who know anything about Elliott wave patterns, wave 5, which is this one, is not supposed to encroach on the price territory of wave 2. So let's wait and see what happens here. Our rule set is designed to help us limit downside always. We've already started doing that. So you just need to follow the rules, but you can't second guess the market. This still has the potential to go long. Remember, none of these methodologies are supposed to be used for prediction. Right, Swiss yen, again, very much in the middle of the channel here on weekly, with last week's candle maybe barely making it into a bearish impulse. But even on the daily time frame, very much inside of the channel. For those of you who are aggressive WM traders, this is now a valid class 1 M pattern, because C close, our future C close, if I was ready to advance the analysis, which we pretty much can now, you'll notice that C close is definitely outside of X2A. The highest close in this wave was there. So that's valid from as a class 1 M pattern. So if you were looking to trade it as such, then it looks like we may well be getting our setup to short this with the first H4 impulse stacking up as we speak. So 25 minutes to go. But you'll notice that we did, if you were trading the end of a phase 1, there was also an overlay, just managed to get to take profit with that. Right, so moving on to Cad Yen. So here on weekly, again, we had that test, as we discussed a while ago, almost a month ago now, the test of the support level, where it failed that test, it bounced back up again. So still very much inside of the channel, not really interested. There's certainly no valid WM pattern for us there either. However, again here, and this is a bit of a common theme on the yen pairs, as you will see, we are seeing a potential class 1 M pattern stacking up. And once again, it's a very similar picture to what we just looked at on the Swiss yen. Should you advance the analysis based on today's lower low, it's a little bit premature on this one, admittedly, because this might end up being non-relevant. We could get, if this made a higher high today, we would need to reverse this analysis. But nevertheless, if we do get that bearish impulse candle coming back down again, then certainly that would qualify as a bearish H4 impulse. So it's moving on to our Aussie and Kiwi pairs. Now, always look forward to that, because at the moment, these are the two that have, well, the Aussie and the Kiwi certainly have given us more action over the last while than anything else. Some of it good, some of it not so good. In any case, Aussie Yen here on weekly. This, as you can see, also very similar to what we saw on Aussie USD, also a breakdown in the sequentiality of cyclicity. So that bearish trend now over. If you're doing LPO ranges, that would be your range. But yeah, we're not trading that anymore, unless you're trading the overlay, of course. Here on the daily time frame, again, similar picture. It did give us the breakout and then pulled back inside of the channel once again, giving us here a valid class 1 W pattern. In this instance, however, we've still got a series of lower lows all the way down, so we are still in this bearish phase 2 or corrective wave. Looking at that on the H4 time frame, what interested us with this last week was the breakdown of the cyclicity with a phase 1 followed by a phase 1. We've had a very deep pullback here, so our kind of prediction for a higher low didn't actually work out, because the market did make lower lows and has done again, through the course of this morning even. but still respecting the support level. So it has not made a lower low, lower close, and it looks like we are about to get a bullish impulse candle. So if you are looking to trade a hybrid, now this would be an aggressive hybrid because of the fact that we don't have a class 2. Well, actually, would it be? No, this is still a class 3 W pattern. If we get a class 3 W pattern over here, that of course is the more aggressive approach. We do have the inside C close, so that's close, but it's still there. In any case, that would mean that we could advance our golden triangle to look a bit more like that. In any case, that is, it has come all the way deep inside of the apex. It's respected the support level, which is the ultimate support level at the moment for this bearish phase 2. If it does respect that, it means that the trend is over. It means that the bearish wave is over, which means that we are into a technical bullish phase 1 wave. So it is quite aggressive to be trading the hybrid from inside of the channel, but certainly that is an option that is available. Okay, so looking at the last of our yen crosses, again, a similar picture. Let's just look at weekly first. You'll see the New Zealand dollar strength showing itself even more here. That has been a theme for some time, where we had just a simple breakout here compared to the Aussie dollar, which was a lot more substantial bearish move. But here on the Kiwi yen, you can see that again, we've got phase 1 followed by phase 1. So that too is a false breakout. And definitely the end of any potential bearish trend, at least for the meantime. So you'll notice that, however, last week's candle was not much to write home about. Let's just look at daily chart here first. Similar picture to the Aussie, except for the fact that we have remained outside of the channel. Now remember, that is an open. So if you're looking at closes, the lowest close in this wave is definitely outside of the channel. So not only is this a valid class 1 W pattern, but it is also a valid channel trade. So this is the most conservative of the setups. And looking at our lower time frame entries, here you can see how it's worked a little bit better. We haven't yet had an entry opportunity on this, but this is now stacking up to be a perfect entry to go long for a hybrid. Not only that, it is a class 2 hybrid. So a class 2 W pattern, I beg your pardon. So that's giving us the more conservative approach. That doesn't guarantee it. It does mean that we have a higher probability of success, but it certainly doesn't guarantee that it's going to be a winner. But it's looking very, very good in terms of the rule set. In fact, that's a picture perfect setup. Right, moving on to our euro crosses, weekly time frame. There's last week's weekly candle, bearish impulse and engulfing candle on the weekly time frame, still inside of the channel, of course. And that's what it looks like here on the daily time frame. So we had another test of that resistance level. It failed the test, rolled over directly into a bearish impulse wave. If you're trading the most aggressive of the overlays, you would be looking for a bullish entry. And nothing as yet, but it looks like certainly with this morning's open down here, if we do get an impulse candle here, bullish impulse candle, that would be a setup to go long on an overlay. So quite a lot of pairs stacking up for potential trades here. Euro Swiss weekly time frame last week was just a high test candle. Again, if you're looking to trade the higher time frame overlays, we're looking for a lower high followed by a bearish impulse candle, but otherwise there's nothing for us to look at there. Euro Cad similarly, but last week was a little bit more interesting. But Euro Cad certainly one of the pairs that are lowest on our priority list at the moment. And here's what it looks like on the daily time frame, very much inside of the channel on both. What we did get was a bearish overlay as well, which was one of our nice little winners there. It is worth noting, even though we're inside of the channel, that this bearish cyclicity is over with the phase 1 followed by phase 1 and now the retracement wave. So, you know, this kind of a picture where we're looking at a valid setup on the higher time frame, we're looking to go long. Now, for those of you who are WM traders only, and you don't mind the fact that you're inside of the channel, then note that we haven't yet had a lower close here. So, you're playing a little bit around the edges with today's candle being inside that future XA leg. So just bear that in mind, because it certainly hasn't been respecting this, what was resistance, now support level, during the course of today. But should you get a bullish impulse candle here, it might well bring you above that level, which means that it looks like it is going to respect that. All right, so that's EuroCAD, a little bit borderline. There are more interesting instruments to look at. Here on the weekly time frame for the Euro Aussie, and this really just gives you some context for what the market's been like recently compared to what it was before, where we had lots of directional bias, bullish and bearish, in the last couple of years, but it certainly hasn't been like that for quite some time, going all the way back to the middle of last year. So worth just noting that. But within the context of all of that, there has been a little bit more in the last month or so, but it just seems to have fizzled out. So here on the daily, well, let me just drop to the other chart on the daily time frame, where we can see that that breakout on the weekly was certainly a false breakout. Likewise on the daily here, as we've discussed before, we had a false breakout. However, what has now happened is it has established bearish cyclicity, and we do have an actual class 1M pattern as of the close of Thursday last week, where that high was ringed. Now, it hasn't done much since then, so if you wanted to trade that, you drop down to the H4 time frame, and here we can see that the bullish phase 2 wave that we were looking at, where the sequentiality of cyclicity basically came to an end. It gave us a couple of entry opportunities, both hybrids. Well, this is the aggressive hybrid with a class 3 pattern. This was the more staid one, either a class 2 hybrid, although I think because we were already into a technical phase 1 on daily, that was actually an H4 impulse. That has not worked out. And in fact, neither of them, we would have trailed the stop on the hybrid to this point as well. So that messy activity on Friday, again, spoiled the party for us on these Aussie instruments. Whereas on the Kiwi instruments, not so much. Again, that New Zealand dollar strength helping us here. So this is the benefit of diversifying across different strategies and different instruments. The additional strength on the New Zealand dollar has kept the trades in place. This trader has only got the one hybrid in play, which is absolutely fine. If you were looking to, let's just go to the daily time frame quickly. If the hybrid was at the end of that phase 2 wave. Now, just pointing out that was again slightly on the more aggressive side, trying to look for a bearish hybrid from inside of the channel. That's fine. You can absolutely choose to do that. And then once that high was properly ringed, which I think was only when we had was only on by the time Friday came along, that was a setup to potentially short this with an H4 impulse, which was the 4 to 8 a.m. candle on Friday. So all of these were potential hybrid setups, from the most aggressive through to the more conservative. At the moment, no matter which one you took, you would still be in the trade. And also you would have actually trailed on all of them, all pretty much to break even. You'll see this trade's effectively at break even already. The H4 impulse, which you would have entered at the open of 8 a.m. on Friday, not the 4 a.m., the 8 a.m. candle open, then certainly you would have reduced your risk substantially, but not quite at break even. All right, so that's one of the more interesting trades or pairs that we had last week. Okay, so looking now at the Gbp crosses here on weekly time frame, you'll notice last week's bullish impulse candle still very much inside of the channel on the weekly time frame, so not giving us anything to look at there. But that bullish impulse candle did give us a valid class 1W pattern. So those of you who again don't mind trading inside of the channel, trading class 1 WM patterns or valid WM patterns, would have dropped down to the H4 time frame and had a couple of trading opportunities over here, all of which are still in fact in play. So these trades still ongoing. We've been able to move to break even on the original hybrid, followed by an H4 impulse once the low on the daily time frame was ringed, giving us an unconfirmed or technical phase one. Therefore, the H4 impulse following that. So you would be not quite at break even on that one, but certainly have reduced your risk substantially. Although I should advance that 1, 2, 3, 4, 5, 6. Let me just correct myself there. You would in fact have been able to trail your stock now to that break even level on the H4 impulse as well. So all now break even. So you now have an infinitely high reward to risk ratio on these trades. So those are there's another pair that actually turned out to be okay, although we haven't yet take profit on those. It's looking more promising rather than not. GBP Cad weekly time frame last week, strong bullish impulse candle coming up towards that previously tested resistance level. In fact, it's quite an established resistance level, so it would take quite a lot to get through it, which is certainly going to happen sooner or later. But so far it hasn't happened. That doesn't mean it's not going to happen through the course of this week, because if you drop down to the daily time frame, you'll notice we've got another valid class 1 W pattern stacking up. At the moment, it's a class 4 M pattern, but as you know, a class 4 M pattern, when you've got the outside C close, stacks up to be a class 1 W pattern. So it hasn't done that yet, and certainly today's bearish candle, as far as it's gone so far, is not supporting Friday's bullish low test candle. So we've got to wait and see what happens here. But should we get that resumption, then obviously in the first instance you're looking for an H4 hybrid, and in fact that's what the analysis looks like. It's coming back down quite steeply, but this is a typical inverted head and shoulders when you have an aggressive reversal with phase one. So remember the recency effect, one of those horrible cognitive biases that we all have, will make us quite worried about this, the strength of this bearish move. But that is very typical at the start of a strong bullish movement. So let's wait and see what happens here. This actually is looking very bullish despite this bearish move over the last 8 hours or so. But again, that's not meant to be a predictive statement. This is a probabilistic exercise. You've got to take every trade. You win some, you lose some. Your losers are small and your winners are big. Right, GBP Aussie here coming back to the Aussie and the Kiwi pairs. This is one of the, on the weekly time frame, certainly one of the better looking pairs where we've had that breakout. And in fact, this is, we're still waiting for another confirmed phase one to give us an established bullish trend here. But it's reasonably established, despite the fact that we had a brief breakdown in cyclicity a few months ago. We've had a significant resumption over here. So I'm happy to treat this as an established trend in any case. And we are outside of the channel. We've got the potential now for a valid W pattern stacking up with our future C close, such as it is at the moment, outside of our future X to A leg and outside of the channel. So if you are on the most conservative side in terms of filters, this is looking like a potential setup for us to go long. So looking at the different strategy types, what do we need? Well, for a hybrid, we need to see the cyclicity break down. I'd be expecting now with this strong bullish wave that we had through the course of last week to potentially be followed by the bearish phase two, and then we'd be looking for that resumption, and that would be a hybrid, giving us a long entry, and of course once we have that low ringed on the weekly time frame, once this is properly ringed, and if you take this week's high compared to last week's high, it's pretty much showing that it's ringed now. So we're almost there, but I'd say that we'd still be looking maybe in during the course of next week for getting a bullish hybrid here on the daily time frame. For those of you who are trading the H4, we'd be actually looking to short this market. We've got a valid M pattern stacking up here with, at the moment, our future potential C definitely outside of our future XA leg. It has come back inside of that channel, showing some weakness. It did not respect that what was support and our resistance level. So if you're trading a potential hybrid on this, it's slightly more aggressive, certainly. At the moment, cyclicity is still intact, but look what's happening here this morning. We've got this bearish impulse candle, which would in fact signify a breakdown in that bullish cyclicity. So this is starting to look more and more bearish, no question about it. And if that's the case, I just want to double check this candle's close, 20.4 compared to the high. That is marginally higher close, meaning that this is a phase 1, phase 2, phase 1, phase 1, which means for a hybrid, we need to have a phase 2 first, followed by a bearish impulse candle. So this impulse candle on its own is not enough. It was really, really marginal. Had this close been inside that wave's price territory, this would in fact be a setup. So very, very close. Just goes to show you, how rigorous we have to be. Now, if you're prepared to bend those rules slightly, then that's up to you. We run all of this on a computerized basis, and our software will measure it to the 10th of a pip. So if it's outside, it's outside. Got to draw the line somewhere. Right, so that's GBP Aussie. Again, coming back to our more interesting Kiwi pairs. Looking here at the weekly time frame, although on the weekly we are very much inside of that channel. And again, that represents the relative strength of the New Zealand dollar. Dropping down to daily, we are really outside of that channel. No question about that. So not only is this a phase 2 outside of the channel, we've got a valid trend here on the daily time frame. It is still a potential trend until such times we get another confirmed bearish phase 1 wave. But a trend nevertheless with a phase 2 outside of not only the channel, but the future XA leg. Now, that means this is a pretty conservative setup for a bearish H4 hybrid. We already had one. In fact, GBP NZD messed us around a bit last week. And you can see that we actually had 2 losers. I think this was the week before, but in any case. And now with what happened here was we did have a breakdown in this bullish cyclicity. It was almost going sideways, which kind of roped us into a couple of trades that didn't work out. Having said that, I'd take that every day of the week with a reward to risk ratio that looks like that. I only need to win 1 out of 4 and I'm profitable. So I don't mind. In any case, it resumed the bullish cyclicity, which again looks like it's breaking down. And in 4 minutes time, we may well see, it looks like we are going to have a setup to short this if you are trading class 3 M patterns. If you're waiting for the class 2 M pattern, then no, you need to sit on your hands at the moment. So this would be a little bit too aggressive for your risk profile. But let's see what happens. We've still got this bullish trend line intact. So it's although we are seeing a breakdown in cyclicity here, let me just draw this in. There we go. Although we are seeing that, look, the odds are starting to climb that we're seeing a bearish resumption here. No question about that. So looking again at the daily time frame, you can see that as soon as that happens, this high will be ringed. And then we'll be able to start looking for H4 impulse trades as well. Just wanted to point out that this loser actually here was a losing overlay. So we had a losing overlay followed by a losing hybrid, which is kind of a worst case scenario for us. That's why I say we got messed around by GBP NZD. No question about it. But fortunately, our diversification across other instruments and strategies, as always, saved the day. Right, so Cad Swiss, let's just look at weekly first, where you can see that we are in a technical bearish trend. It is weak with the pullback, as we mentioned, at the on last week's Monday market review, that it was back inside of the channel in a week, but we had a higher high during the course of last week, but ended up being a bearish candle. In any case, that's not really showing us anything tradable on that time frame, and as you can see here on daily, pretty useless as well, with the one exception for those of you who are trading all an overlay on all impulse waves, because that was very much inside of the channel. That was actually quite a nice winner for a bearish impulse, so happy with that one. Another one of those trades that helped to boost our profitability during the course of last week. Right, Aussie Swiss weekly, another picture that looks very similar, for instance, to Aussie Yen and to Aussie USD. So the close on this one, just confirming 7.4 and the high. Yeah, so this is a bullish impulse wave. So phase one definitely over. That cyclicity has broken down. There's nothing for us to do there at the moment. Dropping down to daily time frame, looks like that. So we just, as we spoke about last week, we had this long extended bullish wave, giving us that another deep V pattern, and now we're into what looks like a phase 2 wave. And I say that because of the quality of the cyclicity here. First of all, that's visible in the quality of the closes, but if you look at the lower time frame, H4, it's the overlapping of the phase 2 waves. Just about every single phase 2 wave is overlapping with the previous one. Yes, we did get on the 7th, we got another overlay, helping to boost our profitability for the week. But apart from that, nothing doing. And because of the higher time frame situation, we're not interested in anything else either. Right, we've just clicked over to the new 4-hour candle. Let's see if any of those trades have triggered. We'll look at that in a minute. Let's finish our analysis. Right, Aussie Cad also deeply back inside of the channel. Last week's weekly candle not showing anything of interest on that time frame. And on this time frame, really, it's just showing that it's really failing to continue with this bullish, high-quality price movement. Yes, we did get a marginal higher close, so we are still in a technical trend on this pair on this time frame, but it's showing enormous weakness. So it's a marginal trend, or should we say a very weak trend. And if you were looking to trade this, well, I'd say that there's much better things to look at. Certainly, your risk budget for the Aussie is going to be soaked up on other instruments. Right, Aussie Kiwi, another one where we've struggled a little bit to get too much out of this. Weekly time frame, though, you can see that we are still in this very long extended bearish phase 1 wave. Last week's bearish engulfing impulse candle being quite interesting, but that's also kind of didn't help us in some ways. But if you look at last week's candles, you'll notice that Tuesday it made that high and it just came straight off that high all the way down. It's apart from one candle closing inside that previous channel, in which wasn't even in our phase 2 wave, we've managed to see that the market has respected this resistance level pretty much all the way through the course of last week, and then rolling over already on Tuesday. So that potentially, well, gave us an initial hybrid setup, and this is an interesting one where we you can see how, and I think we've discussed some of this before in the previous week. So yes, let me just start from 6. This was the start of last week. We discussed that one already, and it continued to make higher highs and higher lows, and then we had it roll over. Came back inside of our golden triangle over here, and then gave us that bearish impulse candle. So here was the setup for our hybrid. We're still in this trade because we are looking for the deeper target. If you had trailed the stop all the way through from break even, you would have actually been stopped out over here for a smallish win. So I think that little tail there would have, the wick would have just stopped you out. As you can see, that's a bit of a pity, but that's the way it goes. If you'd also taken the bearish, well, there was the first bearish H4 impulse here, would not have worked out, unfortunately. And then the second one also didn't work out, with this morning's candle taking that out. Admittedly, for a very small loss because we would have trailed the stop almost to break even at that point. So just such messy price behavior. Our bearish H4 impulse, where we were stopped out on this one, was actually stopped out, I think, pretty much by the spread in the first 4 hours of the week. Over here, we actually got stopped out with a wider spread, but it would have gone higher anyway. So that was the end of that one. So you can see how it's been pretty messy, despite what it looks like on weekly. In any case, that's trading. Right, our last two pairs, both being New Zealand dollar pairs. You'll see on Kiwi Swiss, it didn't make any difference. We've also got that phase one, a very common picture across the Kiwi pairs at the moment, where we've had a breakout followed by a complete reversal on that on a weekly time frame. On daily, of course, what it's meant is that the market's been testing a resistance level, but through the course of last week, it really did nothing. We did have an overlay, dropping down quickly. We had an overlay with a small win, and then looking for the breakdown or the resumption in bullish cyclicity here on the execution time frame on H4. We did get roped into an aggressive hybrid again. Actually, this was not an aggressive hybrid, I beg your pardon. This was a class 2 setup, which is the more conservative approach. It still didn't work thanks to that pullback. However, we've now got what looks like quite a strong bullish resumption. We had the strong pullback on Friday as well, but had you taken a trade over here, you would definitely still be in it. And this morning, you've now got what's looking like a bullish resumption. Obviously, we just need to wait and see what happens there, but definitely a little bit more interesting. The one thing I would say, of course, that again, looking at daily time frame here, we did have a breakdown in sequentiality of cyclicity though. So by the time you start looking for these, you know, we've had that high was ringed and then that high was ringed, which unfortunately means that until we get some kind of breakout over here, we kind of need to sit on our hands and wait. But I know that some folks have jumped in on that. Well, you were in it before, so you've just got to manage that trade. Right, Kiwi Cad on weekly, inside of the channel, but of course we've got quite a strong bullish impulse wave here with 3 impulse candles in a row. Now, nothing for us to do on weekly and execution on daily, but looking at daily as our selection time frame, obviously this is much more interesting, and the Kiwi strength showing itself here against the Canadian dollar weakness. So valid W pattern stacking up, and we had one before. Of course, this was a valid W pattern early last week, and we spoke about this in the market review then. And also outside of what was the channel. So remember that it was outside of the channel, and also giving us this bullish impulse candle. So, I mean, had we had more valid cyclicity on the weekly time frame, this would have been a perfect daily impulse, but of course our selection time frame disqualified that. But then looking for the lower time frame entries, there was plenty. So all the way from the, what was it, Wednesday, Thursday, Friday, we were looking to get involved here. Here with the bearish cyclicity on the phase 2 breaking down, and this was an aggressive entry. I would certainly grant you that for a hybrid, but in any case, there it is. And the only thing you got after that were setups for the H4 impulse. Now, unfortunately, the first one got stopped out with that deep pullback late last week, but it got stopped out at break even. However, that didn't stop us from getting involved again. So on Friday, which has not really done much since then, certainly 1, 2, 3, 4, 5, 6, but our stop now, our system will already have trailed the stop to this point here. So hopefully having survived that slight pullback over there, depending on the offset. But yeah, so not really showing any impetus this morning compared to some of the others, but nevertheless valid setups, and should they not work out, you know, your losses are small, but when they do work out, your winners are big. Right, so that's it for all the currency pairs. A brief look first of all at gold with a bearish impulse candle last week showing the dollar strength against gold, which petered out late in the week. But of course, we are still very much inside of the channels, and there's no valid patterns for us to trade here at all. That previous breakout now clearly showing itself to be a false breakout with this bearish impulse wave. So that's pretty much what it is at the moment. And the stock market's rolling over quite significantly. I haven't updated the analysis on this because we're not really interested in trading any of this. But you can see certainly here on the Dow in the daily time frame through the course of last week, it dipped down quite strongly. So it's not that noticeable on the Dow, but when looking at the S&P 500, slightly different story, because this is the first bearish impulse wave we've had since mid-July. And yeah, I mean, the whole of August, we had a continuation of cyclicity maintaining itself in a bullish direction. And although we had some breakdowns over there, there were no bearish phase one waves until last week. So quite interested to watch what happens there, but certainly we are not trading any of this at the moment. And the same thing goes for the Nasdaq. Similar picture, of course. Breakdown of bullish cyclicity with that bearish phase one last week. And folks, that is actually it from me across all of our instruments. I hope you found that useful. So once again, if you've enjoyed this, I'd really appreciate it if you would like it, if you're watching it on YouTube or inside of our group on Facebook. And if you do have any questions for me, do pop them into the comments below. I will be looking out for those, and I do answer every single one of them. Otherwise, folks, remember to stay safe and stick to your rule set. Everything is about minimizing downside, managing risk first, and then pretty much letting upside look after itself. That's what all long-term successful traders do. Folks, have a great week trading further, and I'll chat to you through the week. Bye for now.